Okay. Good afternoon, everyone. My name is Marie Arrigo. I am a tax partner at Eisner's Personal Wealth Advisory Services, and we are delighted to welcome you this afternoon to Eisner's first annual Private Wealth and Family Office Summit. The objective of this afternoon's summit is to address the particular needs and challenges that face family enterprises today. Changing economic and social conditions have resulted in a paradigm shift, making it imperative for families to take informed action for the preservation and growth of wealth for present and future generations. In determining the topics for discussion at our event, we surveyed our clients and others to ascertain the issues, concerns that are keeping them up at night. And we really hope that our discussions this afternoon will be informative and relevant to your family. And we welcome your feedback and suggestions. Today's changing economic climate necessitates assessing and managing risk in an efficient and effective manner as a means to preserve your family's wealth for future generations. My partner, Tim Spees, will be moderating a panel discussion on best practices and methodologies to mitigate such risk.
Good afternoon. I'm joined today by my colleagues from Eisner LLP. We're going to take you through two family studies where we're going to be illustrating governance and financial reporting and controls. And we're going to pick up where Katie left off with the Smith family. In your outline, you'll see that we have put together some basic facts, which we'll preview, actually just amplify slightly. And then what we're then going to have a discussion here among some of the elements that we actually looked at. Now, again, as said earlier, the Smith family is a multi-generational family that actually does run in their mind and actually operationally a family office. Their investments are comprised of alternative assets and concentrated equity. And they have a slight conundrum in that the senior family member, as Katie mentioned, 80 years old, is looking to transfer governance and operations to the younger family members. And the other family members have some issues in that. There is an element of mistrust. There is an element of all the family members not feeling as if they've been given access to information. Additionally, some of the employees, there's approximately 25 employees in the family office, have been investing pari passu with the family, with the exception that there is a real estate operation on the West Coast that certain of the family office members have been given insider special status with respect to allocations and carried interest that the other family members did not know about. So there's some various dynamics going on. What I'd like to do now is turn to my colleague, Vic, and Vic, in the Smith family example, in looking at the operations, as we've described in the facts, from lack of oversight, what were some of your observations to remedy some of the situations I just described?
Yeah, and I think, Tim, as you know, there's the old saying, be careful what you wish for, as one generation hands the reins to the second or third or fourth generation. As Tim said, this was an organization that grew up quite haphazardly, the family office, that is, over a period of many, many years. The processes weren't given a lot of attention, and as a result, they grew up rather inefficiently and no longer really served the purposes of the office. Very, very cumbersome, very time-consuming, and so on and so forth. Tim, as you know, we use a tool in family offices called a fresh look assessment, which works exceedingly well and allows us to very quickly identify and ferret out the inefficiencies in not all the processes, but in the key processes. And in this particular situation, dramatic change was on the horizon, opportunities to reduce cost up to 40%.
Great, thanks. Now, Joel, in your circumstance, when you worked with the family, you noticed that there were varying degrees of sophistication amongst the family. Some family members were very comfortable and actually could read financial information in a way that made sense to them, and others didn't have that aptitude. How did you interact with the family members to make sure that on a go-forward basis, financial reports and information was meaningful to everyone?
The first step in that process is to review the financial information that they're currently been receiving over many years to determine which items make sense and are clear and which items may need to be adjusted, and then to actually sit down and meet with each family member or groups of members if they have similar interests to determine what exactly are they looking for. Take the time, find out what they need, and then fine-tune the reports to be able to distribute to them on either a monthly or quarterly or periodic basis as they need. The key element of being able to do that is to make sure that you're generating financial records that are accurate and timely. So putting together these systems of accounting on a monthly basis that are reconciled and reviewed become very, very vital, so then these reports can come out whenever they're needed.
Thank you. Art,
Yes.
the CEO right now, the senior family member, pretty much does everything. Reviews all the reports prior to issuance, makes all the personnel decisions regarding the family office, is the lead on all the investment decisions regarding what will be invested in, what investments would be liquidated, even to the point of family members becoming participants in new ventures, what percentage interest might they take. Very pervasive control. What did you look at in the sense of what had to be put in place to give the junior family members what the CEO wanted, and that was more control and more participation in the family office management?
Remember, this doesn't take place overnight, but we basically did a current state, future state. So you had to take currently what the CEO is doing, which is everything, kind of break up his job into what the components are, which in this case was effectively CEO, COO, CFO, and a lot of administrative tasks. Took a look at what the other people in the organization were doing and effectively created an organization chart. Then that was the current state. We then took another look and said, well, what could it look like? And that was the future state. We then went to the family members and said, look, here's how we'd like to see it. What skills do you have, and what would you like to do to fill in and become part of the process? We got that input back and then said, okay, we backfilled in the other spots that they had to hire outside. We also then created a bridge between the family council and the office by creating effectively a steering committee of outsiders. So you would have an outside advisors, outside accountant, outside lawyer, outside investment advisor, and one person from the family council also. And that was the bridge between the two organizations, which helped transition and also helped governance.
All right. And there was also some work we had to do with the CEO, correct? In other words, the senior family member also had to be comfortable as the individual that created a lot of the current wealth, that this process is going to work, and that the trust element in the junior family members also succeeding to that it would be put in place
He had to
successfully.
buy into it, and also that's why I said that governance council, that independent, helped push it along.
All right, good. Let's switch gears now and talk about the Jones family.